Master your money, free your future. Welcome to Budget for Life. My name is Jeremy. I'm not a professional YouTuber. I'm a financial advisor, but this video is not financial advice. In this video, we are going to leapfrog from Q1 to Q2. Okay, these are the assumptions. These are the numbers that we broke down as far as GameStop's hardware, software, collectible sales in Q1. Ultimately, how do you arrive at that total gross profit and margin number, line by line, according to their different business lines, right? Revenues, margins. How can we then use that as a building block for Q2? Because in Q2, some things happened, right? Most notably, the Switch 2 was released. And so, how do you break down this 972? Where does that growth come from? How do you make sense of the margin number? And if we can get a clear picture of Q2 after getting a clear picture of Q1, not only do we start to get a decent idea on the margins and scale of their PSA graded card and card grading businesses, we then also get a good idea on the Switch 2 sales and margins. And most importantly, with both of those, we then get a clear picture in just a few more days on what the margins are for their digital power packs, which is by far the largest fundamental growth driver of GameStop's businesses as GameStop is currently constructed. So let's start breaking it down. But before I do, hey, thank you to those who have joined the channel as fans and friends. I appreciate it. All the earnings of the channel go to DRS Book GME shares. Thank you to those who have subscribed. We got 36 spots left in the Halo Sub Club, the march to 2525. I've had this goal of maybe we could get there by earnings. So if you want to be a part of that final little push, 4 days left. I guess maybe 5 days, depending on when you're watching this. Um, awesome target to hit. Appreciate all you guys, the engagement, the comments. No pressure ever to contribute financially. Again, I am just funneling all the earnings of the channel into the channel's infinity pool. Shares not to be used for anything other than to be there. And hey, another green day so far. You got to love the green streak. Okay, let's dive into Q2. So we know the big picture numbers, right? We know hardware, software, and collectibles revenue, and we know their total gross margin and therefore their total gross profit. Now, what happened? Obviously, the Switch 2 released, which means that hardware, new consoles are going to be proportionally a larger chunk of the console sales. And also, accessories generally bump more noticeably, more aggressively during a new console cycle than used consoles do. This is because people are also buying controllers, right, for their new consoles. So let's start breaking it down, but let's start with collectibles since that is the easiest business. And in some ways, right now, the least consequential assumption, as far as I'm concerned. If you wanted to aggregate, right, I'm tempted to almost do this myself, to take the graded cards and card grading along with the legacy and TCG and just make them one big chunk, right? With something around a 40%, maybe 41 or 42% margin if you're more aggressive on it than me. I think that's fine. The most important part is that we're able to distill out the digital power packs here in just 5 more days. But with a 227 total number, if you were to take the same, and what's changed quarter over quarter? Okay, so starting in Q4, the assumption is that, and the evidence is that TCG was selling out, right? TCG starts heating up. And so as new Pokemon packs are coming in, they are flying off the shelf, right? But GameStop can only sell as many as they can get, right? They don't have infinite inventory. And that's true of anything, right? They can only sell as many as they can get. But as it relates to card grading and graded cards, they do control to a certain extent how many they can get, right? They can buy more of them if they want to sell more of them. And any number of people can come get their cards graded. So my suspicion is that as a percentage of the collectibles business, that the graded card business is growing perhaps slightly faster than TCG as far as how do you break down the total sales. Because I think the TCG sales figures are relatively capped by store count and by the amount of product that Pokemon puts out. And they are not going to put out an infinite amount of product because they want to still have buyers for their products and demand, right? And they want to have some level of artificial, right? Like they don't want an infinite number of cards out there because that would hurt card values, right? So all that to say, I don't think I don't think necessarily it jumped all the way to 30 as far as the graded cards during Q2, but maybe it did. But right now, let's say 28% is graded cards, and then the rest is legacy. What does that mean? You would take a 0.2. Oh, sorry. No money for digital power packs yet. Actually, they actually technically did release like the last few days of July in the very limited beta. But so maybe they actually did make 1 or 2 or 3 million. But for all intents and purposes, we will call that a wash. Um, because there's really no way to know how much did they make in that very limited beta in the last like 3 days of Q2. Um, and that way we can better distill it once we see for the full quarter in Q3. So M352. Oh, 352. Boom, something like that. And then this would be equals M352 minus O369. Boom. Something like that for collectibles. There's your 227.5. Margins, any reason they would change Q1 to Q2? I don't particularly think so. I do think there's a chance that the graded card margins, you could argue in Q3, perhaps took a slight dip, perhaps, as GameStop gets more aggressive in purchasing graded cards to resell. Maybe the margins would slightly start coming down, but I don't think they front ran that in Q2 by any means. And so the total collectibles margins ticking up just a tad as the percentage of collectible sales ticks up just a tad towards the graded card business rather than the TCG business. This does still imply TCG made more money, right, in Q2 than Q1, which is important because I think no matter what way you slice this, both numbers need to be higher, right? There's no real reason why Q2 would be lower for either business than it was in Q1. So, is it possible that I'm starting too low for graded cards or too low for TCG? It's possible, but wherever you base your assumption off of, right, you only have a $16 million improvement in the collectibles business quarter over quarter. And you need to allocate some of that to both lines, in my opinion. In my opinion. So that's where we are for collectibles. Now, let's dive in to consoles. So this 592, obviously a huge portion of this is the Switch. How much? So I'm saying an 18% bump quarter over quarter in accessories. That's based on my historical analysis of how much accessories grows during a new console cycle. So we could just roll with that for now. And again, we'll see how it all kind of shakes out. Oh, 328. times 118. You don't like that? Oh, 328. Boom. And again, any reason why accessories margins would come down? Yeah, I'd say if they're selling a higher portion of new Nintendo branded controllers rather than, say, their Candy Con, which is the main fundamental driver for their increased margins. I would say the new controllers are probably not getting as high a margins for GameStop as their private label. And so overall margins probably came down a bit on accessories. I'm going to say it went down to 36%. But we will see again how our assumptions shake out based on what we can reason quarter over quarter. That's what we're doing first, right? What reasonable changes would we expect? And then we'll see what does that like final number print out and how close is that to the real total numbers. And then we can kind of tweak our assumptions from there. So the split of new consoles to used consoles was about 65 to 35% back in Q1. I am assuming that new consoles bumped considerably and that the split is probably more like 70-30 or maybe even a little bit more dramatic than that. Is there anything we can glean historically? So used hardware in 2017 and 2018 was still a 2-to-1, right? And then back out here, right, you saw it go, the new portion was about 47% of the total hardware business, right, including accessories. That's pre-Switch 1. And then post-Switch 1, it bumps up to about 52%. So it's not as dramatic as you would think because the rising tide lifts all ships. Like the new console coming out also increases demand for used consoles because the price of used consoles comes down, right? And more people trade in old consoles. So GameStop has more used consoles they can sell, right? As well as for games and the rest of it, accessories. So proportionally, you do see that bump, right? That it went from what, 47 to 52? 47 and change to 52 and change. Now we had it all the way down to 44.5% of their hardware business in Q1. And we had accessories overall expanding its portion of the hardware revenue compared to historically, accessories 22% of the hardware business in 2017, 26% of the hardware business in 2018. We had that growing all the way to 30% in Q1. Now, ultimately, even though accessories, we have bumping 18%, as you'll see as a percentage of total sales, they go all the way down to 21% post console release. So perhaps that's a little low. We might end up needing to move a little bit more money into accessories, but we will see what we do with that. So new consoles. As a percent of sales, it's probably in the 52+% range, which is something around what, 300, 310, something like that. And if new consoles, but all right, so here's the other thing I want to say though. We know that the Switch 2 much more highly anticipated than the Switch 1. We also know the Switch 2 highest grossing new console ever, right? A lot of pent up demand, right? 7 years in between, or 8 years in between the Switch 1 and Switch 2. So whatever we saw back in 2017, 2018, right? This 47 to 52, that's based on the Switch 1. And we know that the impact of the Switch 2 is more dramatic than the impact of the Switch 1. So I'm going to say, what if that actually goes up to maybe even 56% or something like that, right? Maybe even 57. Where does that leave us? Well, if electronics is still 1%, you know, overall, did electronics go from 3.4 to 5.9 quarter over quarter? Probably not. But also, it's possible. GameStop started putting themselves out there more with seeking phone trade-ins. Like they're kind of like they bottomed this out, and then they started really in Q1. They started signaling that they want to re-establish, regrow this business. So in all likelihood, it's actually probably a little higher in Q1 than 3.5, right? Maybe it's more like 5.2, maybe. Of course, then we need to just ever so slightly tweak our excess hardware line. So that goes down to 295, right? 1.5%. Then you take that 0.5% away from accessories. And then we have just a slight bit of 0.2. We need 0.2 million more, which I guess we could just edit this figure to make up the difference. 10.95 maybe. Great. Okay. We want the assumptions to make sense quarter over quarter. So again, for electronics to go from 5.2 to 5.9, probably about right. New consoles going from 153 to 340. Basically, almost 200 million in Switch 2 sales is what that would imply. And then you'd have used making up the difference. And what would that put used at? 350 minus 356 minus 358 minus 359. That has you at a 2.5 to 1 new consoles to use, which is that's on the bullish side, right? That's more dramatic than what you saw with the Switch 1, right? In the Switch 1, you saw basically um basically 2 to 1. I guess it's easier to see it over here, right? New to used was basically 2 to 1. And what you're saying is because the Switch 2 is more in demand than the Switch 1 was, that maybe that actually expanded to like 2.5 to 1. And what does that mean for the used business? It means the used business went up 50%, right? They sold 42 more million dollars, a 50% growth in dollar amounts in the used business. To go along with a 140% growth in the new business. which again, historically, these numbers would be a little bit closer together. I'm assuming that there's a little bit of an expansion in the demand for new consoles. And what I kind of want to do is actually bump this accessories number, right? We took accessories margins down a little bit, but I think accessories doing 18% more quarter over quarter. Again, that's the historical figure. But again, with the Switch 2 being higher demand than previous consoles, I wonder, what if they grew 24% quarter over quarter, right? So about 25 million more in accessory sales. And then that takes your used sales down to about a $36 million, $25 million more in accessories, 36 million more in used. I want to get even a little bit. I shouldn't get too much more aggressive though, because we have the historical references for a reason. So, and we saw GameStop do a lot of promotions as far as used deals and promos when the Switch 2 came out. Now, margins. Okay, this is a big one because we know that new console margins no doubt came down. We know that GameStop's margins that they get on the Nintendo products are even lower than they get on the Xbox and PlayStation. And again, you see it, right? 2016, their margins were up at 11%. But 2017 and 18, when the Switch comes out, oh, geez. You end up down all the way to much less than that, right? A 9.1, 8.5%. So is GameStop, is that any different now than then? I don't think it's super different. All right, we can start at, let's go ahead and start at the 8.5 on what we would think would be maybe the lower end-ish of margins. And keep building our, oh geez, I did that for Q1. Sorry, Q1. So maybe there's a little bit of room for improvement. We will see. But as a starting place, based on quarter over quarter, what makes sense fundamentally, I think this is a decent starting point for hardware. Now let's put in software and see if this number comes all together. So software came down, right? From 175.8 down to 152.6. We know that in all likelihood, what came down the least is digital. Digital is probably is historically the most stable portion of GameStop's software sales. And even though GameStop is a tiny fraction of the digital sales market, there's no reason to think that GameStop would be unable to sell digital video games, which is the form of video games that customers generally desire the most. Although right now, of course, it is smaller than their physical video game business because of the physical video game market in the US. GameStop has a huge market share, even though it's a much smaller market than the digital video game market. So digital, right? If we know that the total number came down by a quarter over quarter, I mean, what is that? Basically $23 million, 0.2 divided by 175.8. It's a 13% decline quarter over quarter in software sales. Now this M351, if digital is not dramatically impacted by that, right? I want to say they're almost probably like maybe flat. 39, right? $2 million off of digital would be a 4.8% decline, right? So less dramatically demonstrated in digital. Any reason digital margins would change? I think probably not. Now, new versus used, I think probably compressed, right? We had it expand a little bit, almost 3-1. Not that close to 3-1, but 2 and some change to 1. New versus used, which, as you see, when a new console comes out, at least what happened with the Switch 1, used software went from 31% down to 26%, right? So we had used software in Q1. I wonder if that's what some of my discrepancy is. Oh, 27. Oh, I'm looking at the wrong number. This is the percent of sales. Used compared to new, we had it at 27% in Q1. Okay, yeah. Less than 30 because demand for used physical games is lower now than it was back then. Right, but you're going to see an even more clear drop off, right, from 27% pre-console, right, down to what, maybe 23% or so post-console cycle. And what is 23%? I mean, oh, these are relative to each other. Okay, great. Well, I'll have to get a little bit. Okay, so we're taking software net of digital. Let's go ahead and throw that number right here. M351 minus the digital number of 364. Jeez. So there's 113 left in the pie, which is actually a little higher. How does that even make sense? 175 minus 41. Oh. Okay. The So anyways, if you took like I mean, leave a little bit for PC, I think probably came down like proportionally, right? A 13% drop overall. So 13, and maybe even, I don't know, more dramatically. Maybe like down to an 8.2, right? A little bit sharper than a 13% drop for PC. Any reason PC margins would come down? I don't think so. So now we're talking used versus new. And if we just want to take out PC and digital, 365, there's 105 left. Equals P52. And if about 23% of that is used, then that would leave new to be the rest. M351 minus O363 minus O364 minus O365. Okay, so down to 21% from 27 because I'm including PC in that figure. But am I including PC in this figure up here? Yes, I am. Okay, so probably want this number to be slightly higher. Something like that. Then you're almost at a 3-1. Well, I think that's reasonable. Margins on new software maybe came down slightly because they're brand new. I mean, they're always new, but maybe they didn't. So where are we at? Right, these are our fundamental quarter over quarter thoughts. How close does that get us to this total number? Let's see. Okay, we are. Why does this equal more than? Oh, because I'm using the past number. 283.1 divided by 283.1 divided by 283.1. We're 98.48% of the way there. Why is that divided by 732? 34. Oh, that's the total sales number. Okay. Total sales number is 972.2. Okay, here we are, Q2. So we have a little bit more money to make. I think it's certainly possible this is 9% instead of 8.5% for the new consoles. That's the easiest initial assumption. What else? Man, we are all over this, guys. We are all over this. Let's look at the ratios, new to used. It's possible that used consoles were actually still supported. But if you put money in used consoles, like it's really how much do you think the Switch 2 did? And right now to say that Switch 2 sold basically 190 million, it just feels right. And obviously like we yeah, like the 26% used versus 74% new. You know, we could challenge that. Right, again, these were 2 to 1. Right, if you were to take M 296 divided by the two of them together, this was 34% used versus new and 33% in 2017, so actually increased. I think that's probably the biggest discrepancy we could look at. Software, we know, should decline as a percent of the pie. Used software is not as catalyzed by a console cycle as used consoles are. And obviously, we know that total software came down 13%. So no matter what way you slice it, GameStop's ability to compete is declining all across the board. But we have a sharper decline in used than in new, right? Almost a 30% decline quarter over quarter in the used portion, whereas more modest declines in digital and new, because digital and new were both supported by the Switch 2 coming out and people buying games. Right? Right? I think the used console is probably a little too low. And again, where do you take that from? I'm saying relative to new consoles. So you could also say accessories are a little high. You know, they're 21% of sales. But where were they over here? See, they were 26%. Right? They go from 22 to 26. So it's like, are they high or are they low? It's tough. Both of these are probably, but like we know the total number is what it is. So if you want to raise these even higher, like if you want to raise these a lot higher, because right now we only have 1% of the way left to go. So if you want to raise either of these numbers a lot higher, it means that the margins are much lower. And, we already took some margin off of accessories. We could take a little bit more if we wanted to call that an even higher bump. Right, 21% of the pie. But we saw a huge increase from 2017 to 2018, which is definitely consoles. But what's the dollar increase, right? This is 200, almost 200 million. What is that? 956 minus 784, 172 divided by 784. It's a 22% bump. A 22% bump. Which we already have, right? We actually have a 24% bump. But these are on quarterly numbers. So you should see it. It should be higher. It's probably higher than 24. Because that 22% is year over year numbers. And like again, I wonder what it was in 2016. Oh, it was about the same. 22, 22. So that initial bump, not as meaningful. And then up to 27 in 2018. On a dollar figure, 17 to 18, 22% bump. So maybe accessories just has a longer tail. I think between the two, I think used is probably needing more love. Right? If I were to take this down to 330, all of a sudden you are right there, right? Take 10 million off of new and put 10 million back into used. But if I were to say that it increased actually 26% in accessories rather than used, then you're at closer to that 2 to 1. But again, you want it a little higher than 2 to 1. This is 2.5 to 1 though. So I do think used is probably closer, right? What's 320 divided by 138? That's 2.3. That's probably warmer. I don't know. Maybe let's meet in the middle. What's 325 divided by 133? That's 2.44. That's probably where I want to be. New to used. Quarter over quarter used numbers. Then not quite doubling, right? About a $50 million growth or about a 60% growth and more than a 100% growth for new. And when we make those changes, not only does that get closer to a historical type of range, but it also gets us even warmer to our total number. And then if we take a little bit of margin off of the consoles, I don't want to go lower than 8.5, which 8.5 takes us under. If we go 8.6, 8.7, Nope, don't need a bracket in there. Okay, then we're all over it. 8.65, 6.6, 6.8. Oh no, it's 6.7. It's 8.67. Okay, 29.12, 29.12, 283.1, 283.1. What do you guys think? Is this a fair representation of Q2? What are some big things we learned? Okay. PSA likely increasing its market share slightly, its portion of the collectibles pie compared to TCG because PSA is more scalable and it likely has higher margins, particularly because the grading margins are probably pure profit, right? Most of that revenue probably goes to PSA. GameStop probably gets a little cut of all those grading submissions. The software business is declining most sharply in used, and then PC, and then new, and then digital, but declining across the board, right? But margins for software are actually increasing, right? Goes from 46.82. Oh, actually, no, because new is a larger portion of the pie. Relatively speaking, 52% of sales versus 50%. And we also had the PC come down slightly. So overall, margin's actually pretty steady. Back that up real quick. But declines across the board, most aggressively in the used than anything. And then in the hardware portion, right, what do the margins come down to during a console, right? Pre-console cycle, we're up to about 25% margins on new hardware plus accessories. During a console cycle, the margins on the consoles themselves come down because a higher it's more competitive. They want to get their hands on as many consoles as they can because they're going to sell as many as they can get their hands on. And Nintendo's consoles have even lower margins than PlayStation or Xbox consoles. And obviously the Switch 2 just came out and is a higher portion of the new console sales. And so you have console margins coming down. All the other margins relatively stable. 23, 60, 89, 33, right? We didn't change anything with software. We didn't change anything with collectibles. We did shave about 3% of margin off of accessories, speculating that a higher portion of accessories are coming from Nintendo products, which maybe have slightly lower margins than the CandyCon and private label products. Electronics, basically pretty stable. At some point, I'll probably just lump this into used, new, and accessories. I'm not sure how meaningful it is to keep it separate, but GameStop has begun advertising some push back into the electronic space throughout 2025. So for that reason, I'm leaving it there. And because we do have the historical numbers for it, which is pretty awesome. And likely electronics is maybe slightly higher, maybe accessories is or used slightly lower, whatever. But we know that it kept declining. We don't know how far it declined to. It probably did get very close to zero. How fast is it scaling? We don't really know exactly, but we know 29.12 is the total number, total gross margin. 283.1 is the total gross profit. Now, what's the percent of that gross profit in Q2? Is 42% from hardware, 25% from software, 32% from collectibles, right? The percent of the margin that is coming from software cratering from 33% to 25%. That's a 25% drop in gross profit as a percent of the pie. And it's going to be even lower in Q3, which is amazing. Amazing if you're an investor in GameStop, because one of the biggest bear theses about GameStop is no one wants to buy physical video games, right? Software is going down. Well, guess what? The percent of the pie that software accounts for is becoming lower and lower and lower rapidly, while rapidly collectibles and hardware are increasing, which are much more sustainable and desirable pieces of the pie. So even if software went to zero one day, you're at a position where it really wouldn't hurt you nearly as much as it used to when it was the substantial majority of GameStop's gross profit. Okay, any other changes? This is really exciting. Okay, this 20% number for gross margins, because it means that even when GameStop is selling a brand new, super desirable, all-time leading sales console with all-time record low margins, right? Razor thin margins, as Nintendo notoriously has. Even still, their hardware line is clearing 20%. And that might not mean anything to you yet, but what it means is my valuation model for the hardware business needs to be updated. Because I was talking about worst case 16% margins, fair case 19% margins, fly case 23% margins. Well, guess what? That valued on a weighted average basis GameStop's hardware business at $4.444 billion. And these assumptions were off. The truth is, GameStop's margins on their hardware are actually uh, substantially better than what I projected, than what I estimated way back when. Okay. Which means that the floor, fair, and fly case are all meaningfully higher than what I projected. So I'm excited to update the valuation model in light of some things that we learned, as well as some things we learned with software and collectibles. Software margins also much higher than what I projected the last time that I went over my valuation model for GameStop. So excited to get into it. Let me know, do you think this is pretty accurate, pretty fair for Q2 as far as a breakdown? And are you excited to see what this digital power packs figure does in Q3? I know that I am. Are you excited to see an updated valuation model? Hope you are. It's great times to be alive. Once again, thank you. Okay, we are on a march. 36 spots left to get to 2525. And then forever, it's sealed. Signed, sealed, delivered. Never, ever again will you have the opportunity to be a part of the Halo Sub Club. We'd love for you to be part of it. Okay. Oh, I just lost one, you sucker. Just kidding. Respect to everyone who leaves. The door's always open, okay? All right. That's all I got for y'all today. I will see you in the next one.